Hi, this is Sheldon here from the Currency Advisory Desk with today's report. Well, markets are still to recover from the hangover of Infosys results announced last week. Now, even though we did see a huge sell-off in domestic equities on Friday, the corresponding rise in the US dollar versus the Indian rupee was not that impressive. Now, we had a better than expected CPI figure for the month of March, which came in at 10.39% versus a Feb reading of 10.91%. Along with a good reading for industrial production, which also came in better than expected. Now, these sets of data could have given some support to the Indian rupee, thereby preventing a free fall on Friday. Now, the pair is still trading within the range of 54.30 to 54.90. We have the WPI and trade balance data which will be released later today. Now, we advise our traders to avoid taking any positions before this crucial set of data. However, if we get a better than expected WPI figure, we may see some buying in the Indian rupee. Now, the much talked about US growth has once again come under question due to the lower than expected economic data reported last Friday. Now, we had the retail sales and consumer sentiment figures which came in at minus 0.4% and 72.3 versus an expectation of minus 0.1% and 79.1 respectively. And the euro got some support from these figures against the US dollar. We expect the euro to weaken further and it may break the 1.30 level support against the US dollar. The markets are rife with rumors that Slovenia may be the next nation to face a crisis, a financial crisis similar to that of Cyprus. Now, in rupee terms, traders can sell the euro-rupee pair on every rise. Now, the levels to execute this trade would be between 71.40 and 71.50 levels. We have the Euro region trade balance figures which will be reported later in the day. And there isn't any major data from the United Kingdom today. However, a weaker euro may add some buying pressure on the pound. Traders can buy the pound at around 83.75 levels against the Indian rupee. A weaker than expected US data has also led to some buying in the Japanese yen. We saw the Japanese yen appreciate from its lows of 99.95 to 97.56 against the US dollar. Also, there are some reports that both the United States and Germany have expressed their discontent with Japanese monetary easing. We expect the yen to appreciate further to around 96 against the US dollar before testing the psychological 100 level mark against the dollar. Now, as we see, that the yen has been constantly hitting 99 and 99.95 was the latest high against the dollar, that is. So, as we know that whenever the resistance is tested for repeated times, that resistance will tend to break. So, that's something what we expect to happen in the yen-dollar pair. Now, traders can go long in the yen-rupee pair at around 55.50 levels. Now, we expect the dollar index to strengthen in the near term. The fall in China's GDP for the month of March to 7.7% from Feb's 7.9% has only reinforced the risk of rally. Now, the huge fall in both gold and silver, which was witnessed overnight, add to the demand to US treasuries. So going forward, the dollar should appreciate against the majors in the international market. Well, that's it from the Currency Advisory Desk. Thank you.